The market is live, and right now, Lithium Americas Corp, ticker symbol LAC, is trading at exactly $4.93.5. We are seeing some fascinating intraday volatility here. The stock opened this morning at $4.94, dipped down to test a low of $4.78, and has since clawed its way back up, currently hovering near the high of the day, which sits at $4.97. This kind of price action, where a stock refuses to break down below support and instead grinds its way back to the opening print, often signals underlying accumulation that retail traders miss if they are just glancing at the red and green flashes on their screens. You are looking at a stock that is up over 1.2% on the session so far, with volume already pushing past the 1.9 million share mark, and we are still in the morning session. The tape is moving and the orders are flowing, but the real story here isn't just the ticks on the chart. It is the massive disconnect between what the average investor thinks is happening with lithium and what is actually unfolding on the ground in Nevada. The expectation right now, the narrative that you will see if you browse through the headlines on your Robinhood app or scroll through social media discussions about Robinhood stock trading, is that lithium is dead money. People think the supply glut is permanent, that electric vehicle demand has cratered, and that miners like LAC are just burning cash in the desert. That is the expectation. But the reality? The reality is that Lithium Americas Corp has effectively become a semi-state-backed entity with the full force of the United States government and General Motors behind it. And while the crowd is looking away, this stock has quietly surged nearly 69% in the last 6 months. While Tesla stock and Nvidia stock grab all the oxygen in the room, LAC has been executing a masterful turnaround that is only now beginning to show up in the price. The disconnect between the sleepy perception of this stock and the aggressive execution of its management team is where the opportunity lies, and that is what we need to take apart today. When you look at the chart today, that bounce off the 478 level is critical. It tells us that buyers are stepping in every time the stock dips below the 480 mark. This isn't just random noise. This is institutional support. If you are trading this on Interactive Brokers, watching the Level 2 data on your Interactive Brokers trading screen, you would have seen sizable bid walls stepping up to absorb the selling pressure early in the session. This is the kind of price action that frustrates shorts. They try to push it down, expecting the momentum to fade, but the bid keeps reloading. It is a battle of attrition, and right now, the bulls are winning. The stock is knocking on the door of the psychological $5 level. Breaking $5 is significant because it forces algorithms and programmatic traders to reassess their risk models. A clean break and hold above $5 could trigger a wave of covering that pushes this thing much higher. And the setup we are seeing today with this V-shaped intraday recovery suggests that the market is trying to coil up for exactly that kind of move. Let's talk about why this is happening. You have to understand that for the last year, the lithium narrative has been dominated by fear. Investors were terrified of oversupply from China and slowing EV adoption in the West. But look at what is happening in November 2025. We are seeing lithium carbonate prices in China rallying to multi-month highs. The spot price is waking up. And right in the middle of this macro shift, Lithium Americas is sitting on the most important lithium asset in North America, the Thacker Pass project. This isn't just a patch of dirt. It is a strategic asset that the U.S. government has deemed essential for national security. That is not hyperbole. That is a fact backed by the Department of Energy's loan program. When the DOE handed them a $2.26 billion loan, they weren't just writing a check. They were signaling to the entire market that this project will not be allowed to fail. And just recently, in October 2025, LAC received the first drawdown of $435 million from that loan. That's cash in the bank. That is steel going into the ground. That is distinct from the vague promises you hear from other junior miners. Think about the typical retail investor using SoFi Invest or checking their SoFi Active Investing dashboard. They see a stock price under $5 and they assume it's a penny stock gamble. They don't see the billions of dollars in committed capital that essentially puts a floor under this company's valuation. This is the tension between expectation and reality I mentioned earlier. The expectation is risky penny stock. The reality is fully funded, government-backed infrastructure project. When you realize that, the risk profile changes completely. You stop worrying about day-to-day fluctuations and start looking at the 2027 production timeline. We know that General Motors has poured $625 million into this project. General Motors isn't doing that out of charity. They need the lithium. They need to secure their supply chain because they know that relying on foreign supply is a strategic vulnerability they can no longer afford. The integration here is deep. GM is not just a passive investor, they're a partner in the truest sense, helping to steer the ship toward production. I want you to pause for a second and think about your own portfolio. Comment below how many shares of Lithium Americas Corp you currently hold, or if you are waiting for a specific price entry. It's always interesting to see where the community is positioned. Are you loaded up from the $3 range, or are you chasing this breakout? Let me know in the comments. Now, looking deeper at the recent price action, we have to talk about volume. The average volume on LAC is around 16 or 17 million shares a day. Today, we're tracking a bit lighter than that pace so far, but the quality of the volume is high. We aren't seeing massive dumping. We're seeing controlled exchanges. This suggests that the weak hands, the people who bought in during the hype of 2021 and have been holding heavy bags, have mostly capitulated. What is left are the believers and the institutions. If you look at the ownership data through your Fidelity mobile app or your Fidelity Wealth Management reports, you will see that institutional ownership has been stabilizing. The smart money knows that the bottom in the lithium cycle is likely in, or at least very close. They are positioning themselves for the next leg up, which will be driven not by hype, but by cash flow and production. The Thacker Pass project itself is fascinating from a geological perspective. Located in the McDermott caldera in Nevada, this is a sedimentary resource. It is different from the brine pools of South America or the hard rock spodumene mines in Australia. The chemistry here requires a different processing approach, and for a long time, the market was skeptical about whether LAC could pull it off technically. But the engineering is now over 80% complete. They are building the processing plant. They are pouring concrete. The skepticism is being dismantled brick by brick. When you have major engineering firms and construction crews on site, the science project risk diminishes and the execution risk takes over. Execution risk is standard in this industry, but with the funding secured, the biggest hurdle, capital, is gone. Most miners fail because they run out of money before they dig up any rock. LAC has the DOE and GM ensuring that doesn't happen. Let's discuss the broader market context. If you are someone who engages in self-investing or uses investing sites to manage your own capital, you are probably bombarded with options. You could buy Apple stock and hope for a steady 10% a year. You could chase Tesla stock and deal with the volatility of Elon's tweets. Or you could look at a sector that has been beaten down so badly that it has nowhere to go but up. The contrarian play is always the hardest one to make psychologically. It feels safer to buy Nvidia stock at all-time highs because everyone else is doing it. It feels dangerous to buy a lithium miner when the commodity price is down. But that's where the asymmetry is. The downside for LAC, given the government backing, appears limited compared to the massive upside if they successfully reach that 40,000 tons per year production target. We also have to consider the platforms people are using to access these markets. Whether you are using SoFi intelligent portfolios for a hands-off approach or diving into interactive broker stock trading for low margin rates, the accessibility of these stocks has never been higher. This means that when the narrative flips, when the mainstream media finally decides that lithium is back, the flood of retail capital can be instantaneous. We saw it with GameStop. We saw it with AMC. While LAC is a fundamental play, do not underestimate the power of the Robinhood crowd if they catch wind of a government-backed moonshot. The liquidity is there. The float is tradable. If this stock breaks $5.50 or $6, it could show up on the top movers list on the Robinhood app, and that acts as a self-fulfilling prophecy. The political angle is also inescapable here. The United States government has made it very clear that they want a domestic battery supply chain. They do not want to rely on China. This bipartisan push, because let's be honest, national security is one of the few things both sides agree on, benefits LAC directly. You are not just betting on a company, you are betting on American industrial policy. That is a powerful tailwind. Even if the economy slows down, these strategic projects often get ring-fenced because they're viewed as critical infrastructure. It's the same reason why defense stocks often hold up in recessions. In a weird way, Lithium Americas is becoming a defense